Welcome back, traders. This is my lecture notes on ICT's 2025 lecture series. Today I'll be looking at an example of a trade he took on January 14th. It's going to be a pretty short video, but hopefully I'll still get some insights and I can have some key takeaways. As always, I'll link the original video in the description for you to check out for yourself. And if you like my style of videos, please give this one a like, subscribe, and let's get into it.
You can see the market has dropped down below the 930 fair value gap, and I'm executing on the basis of the lower half of that SIBI at 930 candle.
So if you've been following this model, you'll know that 930 is too soon for the first presented fair value gap. The first presented fair value gap is technically here at 933, but that doesn't mean we should ignore all other fair value gaps. This stands out because we do have a breaker here, high, low, higher, high, and then we also have a fair value gap here within the 930 fair value gap and also nearby the first presented fair value gap. So there's a lot of confluences here, and we're targeting the low at the 830 news release.
And the first presented fair value gap, which is not highlighted, but I'll highlight it here now. Right, and the market has broke lower into the new week opening gap. Right now it's at approximately the high of the new week opening gap. And I'm initially targeting the 830 low. But I'll be looking to take off partial below the 10 a.m. low. So I want to see price get real heavy in here. Placing a buy limit order below the 10 a.m. swing low. Stop now has been lowered to the high of new week opening gap plus 1 tick. All right, so I want to see it remain heavy using that new week opening gap low into consequent encroachment of that new week opening gap. That's a permissible range, and then drops aggressively. And my stop loss has been lowered below consequent encroachment of the new week opening gap, which is those 2 purple lines. Okay, limit order filled. So 1 partial is taken there. And the stop now is lowered below the new week opening gap low. I'm setting a buy limit order in 30 low.
So my favorite thing here is seeing how he's managing his stop. Since we're below equilibrium, he's expecting price to be heavy and quickly run for liquidity. So as price is moving lower, he's adjusting his stop to 1 tick above PD arrays where price should respect if the assumption that price will be heavy is correct. Now I know since I was watching the chart last night that we will get some retracement here and ICT will get stopped out, but I wonder if he will re-enter since the target hasn't been hit yet and we've left equal lows.
And the volatility of this day stopped me out here. And I'm going to look to go in again and re-short it. Market returning back into new week opening gap. It's consequent encroachment level right here. This breaks lower below new week opening gap low. So now I'm going to place a sell limit order in here. And I can trade to the midpoint. We're just below it where I have my stop loss. But I think it's going to leave a portion of that gap open. Nuke the bodies, respecting the new week opening gap low. And I want to see it slowly but surely work its way down and make a lower low. And we are in macro time now. So price should start spooling. What direction? Lower. Okay, so it's done that here. Now I'm going to look to take another partial once it makes a lower low. I do think it's going to go lower. I have a best case scenario trading down to 20,640 level with a limit order below 37.50.
This 637 price does sound familiar, but I don't know how he got it exactly when I went over my charts again. It is below a large pool of liquidity that I'm aiming for also. However, it's not going to get hit the day before CPI.
Okay, price could tap the new week opening gap low again. That would be permissible, but I'd rather see it continuously drop. Okay, that's institutional order flow entry drill, which is an entry into a partial fair value gap. And we should see expansion to the downside and hit that limit order. Here she goes. So what I'm doing is I'm allowing the market to expand in the direction of an old daily low. So if you look at your daily chart, you'll see that that purple line all the way at the bottom of the chart where I have my limit order. That's simply just the best case scenario. It's not necessarily what I demand. I'll be looking to take another partial, and the stop has now been lowered. One partial has been taken again. So now I'm in a position where I don't care if it stops me out, but if it continues, that's all the better. And I have to walk away from the charts at this time. I'm not aware of what it's doing, and frankly, I really don't care. So I'll come back periodically and just peek and see what price is doing. So I'm not really going to walk through anything in here because I wasn't watching at that time. If I would have saw it, I would have been looking at that as a potential inversion fair value gap with that large SIBI that's built, and my stock would be in jeopardy. But again, I wasn't watching at the time, so.
So you may look at this SIBI and think it's still a good shorting opportunity. The problem is price is spending too much time in this. It could potentially still drop, but it's not a good sign when you see a lot of consolidation like this and prices refusing to go below this fair value gap. Now, contrast it to the previous fair value gap where we just have one candle that barely wicked into it and then we left it right away.
When you came back, saw that I could potentially be stopped out using that inversion fair value gap. So I'm not going to risk any more than that. So I lowered the stop there. A lot of manipulation today. Red forward day. It was pretty wild volatility actually. My stop just happens to be above relative equal highs with no recent stop hunt. Okay, so there's a stop loss.
So that's it for this one. ICT was done after this last stop out, but overall you can see that he was profitable. This was on the mini contracts, but we can't tell whether this was with real money or paper. I don't really care, but he may reveal that in his next video. Overall, it was a pretty tough trading day. I kept flipping my bias from bearish to bullish, then back to bearish, but in the end, I decided to just wait until after CPI. I hope none of you got hurt on this back and forth day, or if you did, I hope it was just minimal losses. Hopefully we'll get better trading conditions later this week, and hopefully you got something out of this video. But until next time, safe trading.